Okay, all right. Just stay on. As Prashant was telling us, we are, of course, going to continue talking about the IT companies through the course of the day. And the first corporate on our radar is Cyient. The company reported a very strong performance in Q3. The dollar revenue surged nearly 13%, while the margins have expanded substantially. 10% was the margins in the previous quarter, and this quarter it's 13.2%. And another key positive, the deal pipeline also looks quite strong. There are 5 new large deals in the services segment. Krishna Bodanapu, the MD and CEO at Cyient, joins us now to talk about that. Mr. Bodanapu, good morning and congratulations on a good set of numbers. You've guided for Q4 to be better than Q3. Can you tell us how much better can Q4 be, considering that the environment is quite challenging? We are perhaps heading into a US recession as well. In Q3, your constant currency revenues were up about 3.5% quarter on quarter. What is the outlook for Q4?
So good morning and thank you for having me on the show this morning. So we're seeing some good traction in the industries that we're in. I think one of the good things that's happening for us right now is the aerospace industry, which is a large part of our business, is actually coming back quite strongly because of the various dynamics that are involved there, including air traffic on the civilian side, military spend on the defense side, and so on and so forth. So taking all that into account, we're seeing that there isn't any material issue in demand, at least in the industries that we're working in. Of course, there are certain industries like semiconductor which are slowing down a little bit, and we just will mitigate against that, but some of our large industries are doing quite well. Therefore, from a demand perspective, at least that 3.5% number that you mentioned, we see at least that demand. We will see acceleration of that. We'll actually see meaningful acceleration of that. We're trying to figure out what is the right balance for us, because we also don't want to overstaff and then have to take some decisions, or also we want to look at this as an opportunity to clean up some of the non-profitable customers, etc. That's why we're a bit cautious, but the demand is there and we'll definitely do better than what we did in Q3.
Okay, quarter 4 will be better than quarter 3. Well, the street will like that quite a bit. Krishna, well, give us a couple of more numbers then. You've been talking about going to that run rate of $1 billion. When does it happen? In quarter 3 or quarter 4 of FY24? And the bright spot in your numbers is the margin improvement. How much of that was because of the rupee depreciation? And you've also been telling us that it will gradually improve from here on. What's the targeted number on the margin front?
I think margins, we've done a lot of work on that, and there were a lot of both operational inefficiencies and also overheads, that's between the gross margin and the EBIT line, that we were able to really address over a period of time, and that will continue over a period of time. So while the rupee benefited, or the currency benefited somewhat, but it was marginal, it was maybe 30 or 40 basis points, or actually 30 basis points or so, was because of the currency. But the rest of it was because of operational improvements and operational efficiencies. Our target is to get to at least the mid-cap average to start with. And within the next financial year, we have a line of sight of getting there, because we're still taking on a lot of costs, because things like leases, etc., also have a cost associated with them when you walk away from a long-term lease. We're taking them all in the right sort of balance, those decisions. But we're quite confident that within the next year, we'll at least get to the mid-cap average.
Okay, Krishna, good morning. For investors, IT is still a very much a macro kind of story, that at some point the growth in terms of the US growth will drop, and suddenly there could be deferments, etc. And we also constantly hear investors complain that IT company managements don't forewarn. Of course, I mean, to be fair, you can only say what you see. And that's absolutely fine. But is there any risk of any of this that I kind of described happening, in your opinion, that suddenly things go south and we have these deferments, etc., sometime later in 2023?
See, I mean, honestly, with risk, never say never. So I would say there is that risk, but I also feel that if you look at why things are changing so much and the acceleration that the IT services and the technology services companies have seen, it's because the adoption of technology, right? I mean, there's so many things that are happening where people are using technology that much more. I mean, even simple things like even in our day-to-day life, from going physically to using a computer to using a mobile, that's the transition that's happening today, and you can extrapolate that to industrial and connectivity and so on and so forth. So in that sense, I think there is a bit of a buffer, if I may say, because fundamentally behaviors are changing, fundamentally how people are designing and creating products are changing, and that's what's driving the growth in the engineering space. So, I mean, that risk always is there, because if the economy goes very sour very quickly, then of course, that's also the challenge of technology, right? Because technology adoption is quite quick, and also, when things go sour, people do cut back on technology. That risk is there, but I feel this time there's also a bit of mitigation because of the adoption of technology and the global imperative that these things have to happen quickly. Otherwise, companies will fall behind, and once they fall behind, there's a very significant catch-up. So I think there's, at least in the engineering space, I think some of it is mitigated because of just the technology curve.
Okay, all right. We have many more questions, but unfortunately, we don't have too much time. We will leave this for another day. All the best. Thanks a lot for joining us on CNBC-TV18. Okay, that's Cyient saying that there's good traction across various industries, especially the aerospace industry is coming back in a big way. Before we take a break, let me tell you what's lined up in the next half hour of the show. We'll bring you the top stock picks for the day from our technical and F&O experts in just a while from now. After that, we will have the Market Laser segment by Prashant, the segment where we analyze stocks and sectors through a technical lens. Later, we will decode the stock rally in our Momentumizer segment, so do stay tuned in for that. At 9:10, Nimesh will be there with the standout brokerage report of the day. And before the market opens on our CNBC-TV18 stock board, we will highlight all the top stocks in the news to focus on for the day. So lots coming up. Do stay tuned in.